Welcome to NVIDIA's Wild Ride. Buy the dip or brace for the fall. Today, we're jumping into the roller coaster ride of NVIDIA and the semiconductor world. A bear market hammering the NASDAQ, tariffs sparking panic, and NVIDIA's stock swinging wild. Yet some say now's to buy the dip. We've got investor insights calling this a golden opportunity, warnings about pricing power and trade risks, market rebound that's got everyone talking. Our goal? Cut through the chaos, unpack the trends, and figure out what's really driving NVIDIA's future. Whether investor or just tech curious, let's dive in. Diving in today, you've brought some really interesting stuff about, well, what's been a wild ride for NVIDIA and really the whole semiconductor world.
Lots to unpack for sure.
So we've got like an investor's view on maybe this being a good time to buy NVIDIA, a report digging in these new tariffs. Oh, and some news that, well, the market seems to be bouncing back a bit. Our mission, as always, is to sift through all the noise and figure out what you really need to know right now.
Absolutely. I mean, it can feel like you're just getting bombarded with headlines, reacting to every little thing. We want to help you understand bigger forces at work here, the underlying trends and what they might mean for you.
Yeah? So let's kind of set the scene here. The NASDAQ, well, officially it's a bear market now, a pretty significant downturn. NVIDIA's stock kind of followed suit, dropped quite a bit since January. But here's the thing. One of the sources you gave us actually predicted this sell-off. They were using technical analysis and they saw like a pattern that, well, it actually played out. Even more impressive is that, well, they saw it coming and actually changed their investments because of it. I mean, talk about being ahead of the curve.
It really shows, how powerful it can be to have a solid system for analyzing the market, a framework. Spotted this pattern in the S&P 500, this ascending triangle pattern breaking down, and then they acted on it, decisively, even before a lot of people were even talking about it. It's proactive risk management right there. It highlights the importance of having a plan and being ready to adjust it as things change.
True.
Despite this dip, this drop in NVIDIA's stock, there's this other idea floating around that this could be a good time to buy, a chance to get in at a lower price. I'm going to explore that whole buy the dip idea, especially when you look at how strong NVIDIA is as a company and, their position in the market. One source even argued that, well, the valuation, how much the company is worth, back to where it was in 2020, before their data center business really took off.
That 2020 comparison is really key here. And NVIDIA was known for, gaming graphics cards mostly. Data center stuff, sure, it was growing, but it wasn't the powerhouse it is today. Now, data centers and AI especially, it's like this huge engine for NVIDIA. Data center chips, they're high-margin products. Valuation metrics similar to 2020, it suggests that maybe the market, maybe hasn't fully grasped how big this shift has been for NVIDIA. Interesting. But, and this is a big but, your sources also pointed to some risks. Things that could, cause problems down the line. How much pricing power NVIDIA actually has, for their top-end GPUs, whether these huge cloud companies will keep spending as much as they have been. And then, and those tariffs. Not small things.
These risks are, they're potential challenges to NVIDIA's growth, to their profitability. We can't just ignore them and be, overly optimistic.
It's not.
Weighing these potential problems against the strengths that we just talked about, getting a more complete picture, right?
Seeing the whole board, not just one side of it.
Exactly.
So we also have to look at how the market itself reacted to all of this, right? So initially, there was this worry about the tariffs, right? And chip stocks and AI stocks, including NVIDIA, they dipped. And we saw this rebound, this bounce back. Quickly. It kind of shows you how uncertain things are and why it's important to look past these daily ups and downs and try to understand the bigger trends, the things that really matter in the long run.
That back and forth, that's a perfect example of how market sentiment, how people are feeling, can really drive short-term price movements. Initial fear about tariffs that led to people selling, but then as maybe they thought about the actual impact or maybe they shifted their focus back to the growth potential, well, we saw that bounce. Reinforces this idea that you can't just react to the headlines. You have to look deeper and consider the fundamental things that are really driving a company's long-term prospects.
The things that are going to matter 5 years from now, not just 5 minutes from now.
Exactly.
So let's dig into that buy the dip idea, this idea that maybe this is a good time to buy NVIDIA. As we mentioned, one source argued that the current valuation the company is worth. It's similar to what it was back in 2020 before everyone really saw how dominant their data center business would become. The argument is basically that this drop in the stock price, it's more about the overall market being a bit jittery and not so much about any weaknesses within NVIDIA itself. Think about that, about drawing that parallel to 2020. For someone trying to make sense of this quickly, is that a helpful comparison?
I think it's a really valuable starting point, actually. A historical marker to think about. Picture NVIDIA in 2020. They were mostly known for, like we said, gaming GPUs. Data center business, it was growing, but it was small compared to what it is now.
Right.
Now, fast forward to today, data centers, and especially the AI infrastructure within them, it's a massive growth engine for NVIDIA. And those data center chips, they bring in much higher profit margins than the gaming side. When you see price-to-earnings ratios, those PE ratios, and price-to-free cash flow ratios, the PFCF, similar to 2020, what makes you wonder the market isn't fully pricing in how much more valuable, how strategically important that data center segment has become?
Not just that, oh, the price is lower, so it's a good deal.
Right.
Maybe the price is lower than it should be because the market hasn't fully caught up to how much NVIDIA has changed, how much more they're doing in this booming AI space.
That's the core insight here.
That makes sense. Now, the source did say that, well, they don't think we've hit the absolute bottom yet. There might be a bit more downside in the S&P 500, the overall market, in the near term, the next few weeks or months. NVIDIA's stock is more volatile than the overall market, meaning it tends to swing up and down more dramatically. Well, that could mean a bigger drop for NVIDIA, right?
That's that concept of beta. It's really important for understanding your potential risk. NVIDIA's beta is like 2.46, which means that if the overall market goes down by 1%, NVIDIA's stock could go down by like 2.46%.
So it magnifies it.
Basically. So this higher volatility, it's something you need to be comfortable with based on how much risk you're willing to take. The investor, acknowledging that the S&P 500 might go down further, they're basically saying, hey, be prepared. NVIDIA could drop more in the short term just because of what's happening in the broader market.
So even if the valuation looks good, there's still this risk of it going lower, at least in the short term.
It's a calculated risk they're taking, but it's important for everyone to be aware of that potential volatility.
Willing to kind of like try and time the bottom, get in at the lowest possible price.
That catching a falling knife strategy, it could be risky, but also very rewarding if you get it right.
If you get it right. And their whole argument for doing that, and it was on these valuation metrics we talked about, the idea that the company is actually worth more than the current stock price suggests.
Admit that calling the absolute bottom is, well, almost impossible. You could wait too long and miss out on gains.
Sure.
Belief is that even if they don't buy at the absolute lowest point, the current price is still so good, so attractive that it's worth taking the risk.
Okay, I get that. They also went on to compare NVIDIA's PE and PFCF ratios to AMD, their competitor. Pointed out that on a trailing 12-month basis, NVIDIA looks undervalued compared to AMD, even though they have a much bigger share of the data center market. He referenced a slide from NVIDIA's own GTC presentation that shows just how dominant they are. That market share difference, that seems like a pretty strong signal that NVIDIA is in a good position, right?
Absolutely. The fact that NVIDIA controls such a big chunk of the data center market, which is, driving growth in the semiconductor industry, and yet their valuation multiples are, well, they're similar to or even lower than AMD's. You wonder, right? Maybe the market is too focused on the short-term stuff, or maybe they haven't fully recognized the lasting advantage NVIDIA has in this crucial sector.
Basically, the market isn't giving NVIDIA enough credit for how well they're doing in this really important part of the tech world.
That's the idea. And that GTC slide, it visually reinforces that dominance, making the valuation comparison even more striking.
And to really drive that point home, they said that these ratios, these PCS and PE ratios, they're as good now as they were back in 2020, even after accounting for the stock split.
It's a powerful way to highlight the potential here. Essentially saying, look, on a fundamental level, you can buy a share of NVIDIA today for a similar price relative to its earnings and cash flow as you could in 2020. Really strengthens that buy the dip argument, suggesting that the true value is there, even if the market isn't fully recognizing it right now.
Yeah, I see that. And their final thought was that even if you don't buy at the absolute bottom, even if you miss it by a bit, buying it now could still lower your average cost basis over the long term.
It's a more practical approach, less about trying to be perfectly precise and more about taking advantage of a good opportunity. Recognize that, nobody can perfectly time the market. So instead, they're focused on this idea of long-term accumulation, buying shares gradually by starting now. If the price dips a little more, they're still likely to get a better average price than if they waited for, a clear upward trend that might not even happen.
Right? It's about thinking long-term, not just trying to make a quick buck.
It's about building wealth steadily over time.
So we've got a good grasp on that optimistic buy-the-dip view. But like we said, it's important to consider the risks too. And one of the big ones is this potential with GPU pricing power. NVIDIA's ability to keep raising prices on their high-end GPUs. SBC analysis you gave us, it suggests that maybe there's a slowdown there, that they might not be able to increase prices as much as they have been, that there isn't a huge jump in the average selling price between the upcoming B200 and B300 GPUs, or between the GB200 and GB300, those NVL72 rack architectures.
And that's crucial for NVIDIA because a lot of their amazing revenue growth lately, it's come from, selling more units, but also from steadily raising those prices. If they can't keep bumping up those prices, they'll have to rely more on just selling more and more units to keep growing at that same pace.
That makes sense.
HSBC is pointing to this lack of big price increases between these next-gen products. It suggests a few things. Maybe competition is heating up, or maybe their customers are pushing back against further price hikes. There's questions about whether they can keep those profit margins so high.
Because if their costs go up, but they can't raise prices to cover those costs.
That eats into their profits.
Okay. HSBC also pointed out that there isn't a huge architectural shift, in terms of the chips themselves outside of the new HBM4 memory with the upcoming Vera Rubin generation. That the number of GPUs per rack, it's staying the same until the Rubin Ultra architecture, which is supposed to come out in 2027. Who's not, deep into chip design, what does that actually mean for NVIDIA's pricing power? Explain it in simpler terms.
So imagine it like this. Instead of, completely redesigning the car engine, the GPU in this case, the Vera Rubin generation is mainly about putting in faster fuel, the HBM4 memory.
So upgrading from, regular gas to premium gas, but not actually changing the engine itself.
Exactly. And while that'll definitely make it run better, it's not like this revolutionary leap in performance that customers might be used to, the kind of thing that would normally justify a big price increase.
Right? Because if it's not that much better,
Going to be less willing to pay more for it.
okay, so this slower pace of big, fundamental changes to the architecture, that could be another factor in this potential slowdown in pricing power.
Because if the performance jump from one generation to the next isn't huge, well, they might not be able to raise prices as much as they have in the past.
Makes sense. And one of your sources pointed out that if NVIDIA can't keep raising prices as much, well, they could start to look more expensive on those key valuation metrics, E and PFCF, even if their stock price stays the same. Seems a bit counterintuitive. How could a stock be more expensive if the price doesn't go up?
It's an important distinction. So if NVIDIA can't increase their prices as fast as their costs go up, their profit margins are going to shrink. Even if the stock price stays flat, those lower earnings, that lower cash flow, it's going to mean a higher PE ratio, higher PFCF ratio. So suddenly, for every dollar of earnings or cash flow the company is making, you as an investor are paying more for it.
I see. So the stock might look the same on the surface, but underneath, the fundamentals are changing, making it less attractive.
Exactly. And the source mentioned that NVIDIA, they have these really high net income margins compared to, say, AMD, which gives them some breathing room. Can't keep raising prices. That advantage will slowly disappear, making the stock look less appealing even without a drop in the price.
Right. Okay, now let's talk about those tariffs. Potential Liberation Day tariffs. Definitely been causing some anxiety in the market, and for good reason.
Any talk of tariffs hitting the semiconductor industry tends to make people nervous, and you can see why tariffs can be like a tax, increasing costs for companies, disrupting those complex global supply chains, and ultimately it can lead to higher prices for consumers and lower profits for the companies. That initial sell-off we saw, that was the market basically saying, we're worried about these potential ripple effects across the whole tech sector.
Right. Now, one of your sources had a really interesting point about this. They said that a lot of NVIDIA's AI servers, the ones going to the US, they probably come from Mexico. The USMCA trade deal, those shipments might be exempt from these new tariffs.
That's a big deal if it's true.
The numbers they mentioned were like 60% from Mexico, 30% from Taiwan last year, and apparently NVIDIA's suppliers are building even more factories in Mexico, so that percentage could go even higher.
Right.
It'd be a big buffer for NVIDIA, right?
Huge. If most of their AI server shipments into the US are coming from Mexico and they're protected under that USMCA agreement, well, they'd be shielded from tariffs that might be put on goods coming from other places like China. Could give them a real leg up over their competitors who might be more reliant on supply chains that start in those areas that are subject to tariffs.
Yeah. So the impact on NVIDIA specifically might be less than people initially thought. That's good to hear. But even with that good news about the servers coming from Mexico, the overall feeling around semiconductor stocks has definitely turned negative, partly because of these tariff worries, but also because demand for chips used in PCs, smartphones, cars, all that stuff, it's down.
There's this cyclical downturn happening.
And any hopes for a big recovery in the second half of 2025, well, those seem to have faded a bit because of this uncertainty.
Even if NVIDIA's high-growth AI business is somewhat protected from the direct hit of tariffs because of their supply chain, the overall negativity surrounding semiconductors can still drag their stock price down. Investors might get more cautious about the whole sector just because of the general uncertainty created by these potential tariffs and the weaker demand in those other big chip markets.
If NVIDIA is doing well in one area, the overall negativity can still weigh them down.
It's like a dark cloud hanging over the whole industry.
Yeah, I get that. Now, there was also this point about a potential for a much bigger market sell-off if tariffs were applied to those core semiconductor components that companies like NVIDIA, Fable's companies, they have to import. First source you gave us, they didn't think that was very likely to happen, mainly because, well, it could trigger another big downturn in the market.
It's a bit of a guessing game right now, trying to figure out exactly what will happen with these tariffs.
Totally.
Source raised a good point. Widespread tariffs on those crucial components. It could cause a backlash, a negative reaction in the market, which might make policymakers hesitant. Well, trade policy can be unpredictable.
Yeah.
Even the threat of these broader tariffs, it adds another layer of uncertainty, which can make investors nervous, hesitant to jump in.
Last thing on risks. There were these reports about potential cutbacks in spending, in capital expenditures, or CapEx, from those big cloud computing companies, the hyperscalers. There was talk of Microsoft maybe pausing or delaying some of their data center projects. It's a worry for companies like NVIDIA.
Or because they supply those data centers.
But then Microsoft told Seeking Alpha that their big $80 billion CapEx plan, it's still on track, which is a good reminder that sometimes these initial reports aren't always accurate. Important to wait for official confirmation.
It really is. Those early reports, even if they're corrected later, they can create a lot of doubt and fear, especially for companies like NVIDIA, whose success is so tied to how much these big data center operators are spending.
If those companies aren't buying their chips, NVIDIA is in trouble.
So Microsoft saying their plans are still on track, that's definitely a positive sign for NVIDIA. But, it's still crucial to keep an eye on what the other big hyperscalers are doing, especially during their upcoming earnings. Start cutting back on their spending, that could be a sign that demand for NVIDIA's chips is weakening, which could impact their pricing power down the road.
Got it. All right, let's shift gears now and look at how the market reacted in the short term. For that initial sell-off, the one driven by tariff worries, We saw NVIDIA stock and other semiconductor and AI stocks, they bounced back pretty strongly.
Did.
HLX Semiconductor Index, the SOX, that also went up. And Supermicrocomputer, they're a big server maker and a partner with NVIDIA, their stock jumped up quite a bit. The market overreacted to the tariff news, or maybe it just shows that, well, people still believe in the AI growth story, you know?
It's like this constant push and pull between, short-term fears and those long-term growth stories. With these worries about tariffs and, the overall economy, there's still a lot of faith in the potential of AI and NVIDIA's role in it. Supermicro's jump, them being so closely tied to NVIDIA in the AI server space, it just reinforces that positive sentiment around AI.
Okay. Now, you also included some takes from analysts in your sources, their views on all of this. Razgon from Bernstein, he kept his outperform rating on NVIDIA. Say he's a bit cautious because of the overall market right now and how hard it is to say, where the bottom is when the stock will stop falling. Still believes in the AI story, and he thinks that, well, at these prices, NVIDIA is probably a good buy, once the market calms down a bit.
It's a pretty balanced take. He's acknowledging the uncertainty, but also highlighting those long-term strengths. Outperform rating means he fundamentally believes in the company's future, but the caution is him saying, hey, there are risks and it's tough to say exactly when things will turn around.
So don't go all in, but keep an eye on it.
Exactly. He's essentially suggesting a bit of patience, waiting for the dust to settle before making any big moves.
Makes sense. Now, Mizuno Securities, they pointed out something interesting. They said that sentiment towards semiconductor stocks was already pretty negative before. Talk about tariffs. They blamed it on the cyclical downturn, the weakness in those more traditional chip markets. So the tariff news, it was like adding fuel to a fire that was already burning.
Really good point. Sentiment was already low because of the problems in, the PC and smartphone markets. Then the semiconductor industry was already facing some headwinds. When the tariff news hit, it amplified that negativity, making investors even more risk-averse towards the whole sector.
Not just about the tariffs themselves, but also about how they play into this existing unease. Okay? Bank, they were more cautious. They lowered their price target for NVIDIA from $145 to $135 and kept their hold rating. They said they're worried about both the tariffs. The fact that they don't expect earnings to grow that much, even with strong AI demand.
A more conservative outlook. They're more concerned about those negative impacts from both the tariffs and the slower recovery in those traditional semiconductor markets. The fact that they're expecting muted earnings growth even with all the excitement around AI. Well, it's just, they think those headwinds are going to be pretty strong enough to offset some of that positive momentum.
Basically saying, hold on, don't get too excited just yet.
The hold rating means they don't see a lot of upside potential in the near term, given all these uncertainties.
And last but not least, JP Morgan, they were the most bearish, the most negative. They said that semiconductor stocks could keep falling over the next 6 months, mainly because of those tariff worries.
That's a pretty cautious view. It shows how concerned some analysts and investors are about those potential tariffs. Basically saying, hey, these trade policies, they could have a much bigger and longer-lasting negative impact than some people think. Highlights the uncertainty surrounding all of this. How these trade policies could affect the whole semiconductor industry.
So taking all of that in, what are the big takeaways here? This stock, NVIDIA, that's been all over the place lately, up and down, influenced by both the overall market and these specific concerns about, tariffs and their pricing power.
There's a lot going on. It's not a simple story.
Really not. So for someone trying to make sense of this, what are the key things they should be thinking about?
I think the main thing is that it's not just about deciding to buy or sell NVIDIA right now. There are all these moving parts to consider, from the overall economy to the specific challenges facing the semiconductor industry, and even geopolitical risks.
Yeah, it's complex. So it's not a clear-cut decision, one way or the other.
Definitely not.
And you have this potentially attractive valuation. It seems like the stock might be undervalued, especially when you compare it to its historical performance and the huge potential growth in AI. There are these very real risks like those tariffs and questions about their pricing power, and the overall economy is a bit shaky right now. And even the experts, as we've seen, they don't all agree.
Exactly. That range of opinions, it just shows you how much uncertainty there is, and it highlights the need for everyone to do their own research, really dig into it.
And think about how much risk you're comfortable with and what your long-term goals are.
Exactly. There's no one-size-fits-all answer here.
Someone who wants to understand this quickly but thoroughly, I think the most important thing is to see how all these factors are connected, Even if they might not directly hit NVIDIA's AI servers from Mexico, they could still affect the whole market, the whole semiconductor industry. Those big cloud companies start cutting back on their data center spending. That could hurt demand for NVIDIA's chips, even if their chips are the best out there, technologically speaking.
It's all interconnected. The semiconductor industry is part of this huge global web, and something happening in one part of that web, even if it seems unrelated to a specific company, can have ripple effects throughout the whole system.
Yeah, that's a good way to put it.
Understanding those connections, that's key for making smart decisions in this environment.
So this is definitely not a simple buy or sell situation. It requires you to really think about your own risk tolerance, how much you're willing to lose, and what your goals are. It for the long haul, or are you trying to make a quick profit? Because there's potential for both big gains and more losses in the short term. The rebound we saw shows you that the market can change really quickly, and it shows that people still believe in the AI story. But, we shouldn't read too much into one day's trading. Certainty is still there.
Exactly. Those short-term movements, they can be driven by all sorts of things. How people are feeling, speculative trading, all of that. One good day doesn't mean the risks have gone away.
Right? So if you're interested in learning more about all this, digging deeper, I think it's worth looking at NVIDIA's data center product roadmap, the one they presented at their GTC conference.
Good idea.
Keep an eye on their upcoming earnings reports and the earning reports from those big cloud companies too. That'll give you some real-time insight into, what's actually happening with demand and pricing.
And those GTC presentations, they can be really informative if you want to understand where the company's headed.
Good to know. And finally, a thought to leave you with. I know it's tempting to try and perfectly time the market, buy at the absolute lowest price and sell at the absolute highest price.
It's the dream.
But, focusing too much on that can distract you from the bigger picture. It's more important to understand the fundamentals of the companies you're interested in, how they make money, what their strengths are, and how the industry itself is changing.
It's a constant balance, right? Volatility, it can create opportunities, but getting too caught up in trying to predict